Hello everyone, welcome to our live. Today is Carrie speaking. I will talk about the international situations of the stainless steel. First, Russians approve steel export test and will be imposed for the period from August 1 to December 31 this year. And this measure suggests a means to curb the price increase for steel in the local market in Russia. In addition, China is following up to control production capacities and reduce export sales. South Korean and American steel mills have also begun annual overhaul, which will cause a serious shortage of global steel supplies and demand. As COVID-19 is well controlled in many countries, the next step is to promote infrastructure constructions. The demand for steel will increase. The situation will become more serious as it approaches the end of this year. Global steel price will rise, and the times can extend to the first half of 2022. Second is about the LME nickel price. LME nickel price keep rising due to the continuous dropping inventories. According to market participants, the continued drop in nickel inventories shows that the market demand is still strong, coupled with high use of nickel in the new energy vehicles and high-scale dealings of stainless steel productions at China's mills. The nickel price kept rising, and it was expected to keep stable in a short term. Third is the Chinese stainless steel demand height. Stainless steel price in China continues to rise, with nickel on the LME and HHFE up over 3% in the years to 13 June, and signal from the nickel markets that demand could increase again. Stainless steel buyers PMOs. And fourth is steel factories in China have to cut the productions. In several provinces in China, such as Anhui, Shandong, Zhejiang, Hunan, Shanxi, and steel factories operators have been ordered to cut the productions. The background is said to be environmental protection measures and to achieve its carbon emissions targets. Fifth is EU stainless steel buyers try to secure demand in the second half of 2022. And due to the limited supply of local stainless steel products in Europe, many large companies will import stainless steel from overseas. The procurement period in the second half of this year is appreciated. In order to maintain inventory levels and take the risk in the peak seasons, many customers will purchase in advance. So as demand increases, price will also increase. A report on the steel industry from India shows that due to the peak demand seasons for the automotive industries in the second half of the year, and the recovery of the construction and real estate industries, India's record steel price will not ease, and demand will rise further. And seventh is about Indonesia's rise force in global stainless steel productions, and data shows that Indonesia is expected to surpass India to become the second largest stainless steel producer in 2021. The president of ISADA said, because the Chinese government has concessed export tax rebate, and the export of Chinese stainless steel have been instituted have been in cities. Chinese companies have been setting up factories in Indonesia to produce stainless steel, which will further increase Indonesia's production capacities. Okay, now I will introduce some information about the situations of the sea shipping costs, which many customers care. Shipping costs have rising sharply and fierce competitions for ocean freight capacities is the new normal. With new capacities only slowly coming on street, sea shipping costs are expected to continue to reach new heights this year and will remind about their pro-COVID-19 labels in the longer term. Shipping costs have been growing strongly since the autumn of 2020, but the first months of this year have seen a new surge in price. Prices for several chain lines have tripled compared to last year, and charter prices for container vessels have seen similar rise. You can see that this is the sea shipping cost from 2019 to the present. Studies from the July 2020, the shipping costs have started to increase, and this year the increase is very crazy. This is little signs of relief in the short term, and shipping costs are therefore likely to continue spiking in the second half of this year, because the global demand will continue to rise, but with limited increase in shipping capacities and the effect of low-cost lockdowns. Even when new capacities arrive, container liners will continue to be more active in managing it and keeping the shipping costs at a high level than before the COVID-19. So why sea shipping costs aren't going to come down anytime soon? First, there has been a labor shortage in many ports, such as the United States and Europe. And repeated epidemics have caused the numbers of seafarers to decrease. This has further dragged down the global shipping capacities and promoted the increase in sea shipping costs. In addition to the shortage of ships, many main ports have been affected by the labor shortage, such as the Flagstone, Rotterdam Port in Europe, Los Angeles Long Beach Port in US, and so on, and their operating efficiencies has fallen sharply. At the same time, the sharp rebound of the COVID-19 in India and the Philippines has caused many countries to refuse ships to carry in India's and Philippines seafarers into ports. But the numbers of seafarers of India and Philippines account for more than one-third of the global proportions. The labor shortage of ports and the decrease of India's and Philippine seafarers has further aggravated the contradictions between supply and demand in the shipping industries and pushed up the shipping costs. Second, problems that had built up from the beginning of the COVID-19 have increased the imbalance in the production and demands for goods. And countries slowing down and opening up at different times, as well as shipping companies cutting the capacities on major routes and shortage of empty containers. With the economic recovers and the strong recovery of global demand, some countries has exported more goods before the COVID-19. Importers and exporters are working hard to ensure production capacities, load and deliver goods. With the recent outbreak of the Yantian epidemic and the continuous impact of the Suez Canal breakage, these difficulties have been magnified. Unfortunately, Yantian Port is slowly resuming operations. This continued demand has translated into rising shipping costs on many routes. High consumers demand and still large inventories label indicates that there will be not relaxations in the short term. It is expected that transportation demand in July will continue to increase. And thus, the reason is there is no other transportation ways for our products. Lack of seaborne alternatives means it is difficult for us to avoid the higher and higher transportation costs. And fourth is port congestion and closures keep creating delay. As the link between consent sailings and delay suggests, congestion is also the part of the problem. Shipping performance in 2021 has carried on where 2020 led off. Light lower rate of vessel keeping to schedules and average delay for late vessel ridings. So in the current situations, many importers and exporters are wondering when they can expect the shipping price to go down. I think the answer is no yes. But despite potential delay and high shipping costs, there are also a few steps important can take right now. First, you can compare more quotations to make sure you can get the best cost and most efficient service properly. Then you can buffer your friend's budget and shipping times for chance. Costs due to the unforeseen delay or limited capacities can arise, so please be prepared. Then pay attention to the profit of your goods. Additionally, remember to factor in fresh costs when assessing the profits. And then you need to understand that delay and extra chance may arise. And the important one is make the purchase plan if you can. Considering the shipping times, so plan the order now to get goods moving as quickly as possible. So the about is about the shipping cost and how this information is helpful to use.